Hello everyone and welcome back to the channel. Today we are diving deep into the world of fundamental analysis and I am going to show you step by step how to use one of my favorite tools, that is screener.in, to thoroughly evaluate any stock. If you are serious about long-term investing, understanding fundamental analysis is crucial and screener.in makes it incredibly easy. Alright, so here we are on screener.in homepage. First thing first, if you don't have any account, I highly recommend signing up. It's free and give you access to a lot of features. For this tutorial, I will be using my logged in account. Let's pick a stock to analyze. For demonstration purposes, let's search for, say, Reliance Industries. You just type the name in the search bar and hit enter. And here we are on the stock page for Reliance Industries. This page is packed with information and we are going to break down each key section for our fundamental analysis. First one is overview and key ratios. The first thing you will notice is the overview section at the top. You have got the current market price, the high and lows for the year, market cap, and the PE ratio. These give you a quick snapshot. See this key ratio section? This is super important. First one is stock PE. This tells you how expensive the stock is relative to its earnings. We will compare this to the industry PE later. Second one is ROE, which means return on equity. This measures how efficiently a company is using shareholder investments to generate profits. A consistently high ROE is a great sign. Third one is ROCE, which means return on capital employed, similar to ROE, but it also includes debt. This gives a broader picture of how well the company is generating profits from its total capital. Fourth one is debt to equity, crucial for understanding the company's leverage. A lower debt to equity ratio is generally preferred better. Now I'm gonna add two more ratios. First one is sales growth. I'm gonna add it for like last 5 years. We want to see consistent revenue growth. The next key ratio I'm gonna add here is profit growth. This also I'm gonna add for the last 5 years. Similarly, consistent profit growth is also a strong indicator of a healthy business. Next up, we have the price chart. While fundamental analysis focuses on the company's intrinsic value, a quick glance at the chart can give you an idea of price trends. You can adjust the time frame here: 1 month, 1 year, 5 years, maximum, whatever you like. Look for general trends rather than short term fluctuations. Scrolling down, you will find the peer section. This is incredibly valuable. It allows you to compare key metrics of your chosen stock with its competitors in the same industry. Like here you can see the competitors of Reliance in the same sector. By comparing the PE of Reliance to its competitors, you can see whether is it undervalued or overvalued compared to its competitors. Now let's get into the nitty-gritty of company's performance, which are quarterly results. Here you can see the sales, expenses, operating profit, OPM, which means operating profit margin, other income, interest, depreciation, profit before tax, and net profit for each quarter. Key things to look out for. First one is consistent sales growth. Are sales increasing quarter over quarter or year over year? Second one is improving profit margins. Is the OPM stable or improving? Third one is controlled expenses. Are expenses growing slower than sales? Fourth one is steady net profit. Is the net profit showing an upward trend? Pay attention to any significant one-off items that might distort the true picture. Below quarterly results, we have the profit and loss statement, which gives you the annual financial performance. This is crucial for understanding long term trends. Again, focus on first one is sales. Look for consistent and significant sales growth over many years. Second one, operating profit. Has the operating profit been growing consistently or no? Third one, net profit. Is the net profit consistently increasing year after year? Fourth one, EPS, which means earning per share. This shows how much profit the company makes for each outstanding share. Look for a rising EPS. Now let's move on to the balance sheet. The balance sheet gives you a snapshot of the company's assets, liabilities, and equity at a specific point in time. Few important items to analyze here. First one is reserves. Growing reserves indicate the company is retaining profits. Second one is borrowings. This is the company's debt. Compare it to reserves and sales. A company with high and increasing debt might be risky. Third one is fixed assets. Indicates the company's investment in its operations. Fourth one is cash equivalents. Healthy cash on hand is always a good sign. Now the last ratio is debt to equity ratio. Revisit this here. Is the company taking on too much debt or no? It should be low for a healthy company. Now let's move on to the cash flow statement. The cash flow statement is often overlooked but is incredibly important. It shows the actual cash coming in and going out of the business. A company can show profits on paper but still have cash flow problems. A few things that you need to look out here. First one is cash from operating activities. This is the most important. This is the most important thing that you need to look out for. It shows the cash generated from the company's core business operations. You want this to be positive and consistently growing. Second one is cash from investing activities. This shows the cash used for investments, for example, buying assets or generated from selling assets. Third one is cash from financing activities. This relates to debt and equity, borrowing money, issuing shares, or paying dividends. The last one is net cash flow, the overall change in cash. Now let's move on to the ratios section. Screener.in also provides a dedicated ratios section with even more detailed financial ratios. Here we explore ratios like debtor days, which means how long it takes customers to pay their bills. Next one is inventory days, which means how long investor sits before being sold. Third one is working capital days, which tells us how efficiently the company manages its working capital. Analyze the trends of this ratio over the several years. Are they improving or not? Finally, let's look at the shareholding pattern. This tells you who owns the company's share. Few things that we need to pay attention here. First one is promoter holding, which tells us about the percentage of shares held by the founder's management. A high and consistent promoter holding can be a good sign. Second one is FII, which means foreign institutional investors, and DII, which means domestic institutional investors. These are smart money investors. An increasing trend here can indicate confidence in the company. And let's move on to the public holding. The percentage of shares held by retail investors like us. Look for any significant changes in the shareholding pattern, as this can sometimes signal important developments. So, there you have it, a comprehensive walkthrough of how to perform fundamental analysis on screener.in. Remember, fundamental analysis is not about quick gains, it's about understanding the underlying business, its financial health, and its growing prospects for long term wealth creation. This platform provides an incredible amount of data in a very user friendly format, making it accessible even for beginners. My advice is to practice with different stocks, compare companies within the same sector, and get comfortable interpreting these financial statements and ratios. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more investing content, and let me know in the comments below what other topics you would like me to cover. Thanks for watching. I will see you in the next one.